Hello guys, hello, good evening to all. You're welcome to today's live section. Good evening guys. Quick check, can you guys hear me? Can you hear me so that we can proceed guys? You're welcome to today's live section. You can go ahead and share the link to your friends to join and learn too. Hello guys, if you can hear me, just say yes in the comment box. Hello guys, can you hear me? Can you hear me? If you can hear me, say yes in the comment box and just state where you are joining us from and the type of trader you are. You know the drill. State where you're joining us from. If you can hear me, state where you're joining me from and the type of trader you are, whether you're a beginner or an advanced trader. Alright, so I can see from the comment box audio video is okay, so I can see that you guys can hear me. Okay, nice. So just state your name and where you are joining me from. Let's get to know each other. Okay, the speaker, Happiness Hanson. So state your name and where you are joining me from for this live section. State your name and where you're joining me from. So I can see Kilo from Nigeria, Ali from Kenya, you're welcome. Marvelous Grace Speaks from Enugu State, beginner trader, you're welcome. I can see Benita, Nigeria, you're welcome. I can see Shema from India, you're welcome. You all are welcome for today's live trading section. I'm really happy to have you all here because I have a lot in stock for you guys. So don't leave this particular section because at the end of this section, you'll get to understand how I take my trades. That's what I want to teach you guys today. I want to teach you how I take my trades and we'll also look for possible setups together, and I will also share out a promo code that you will use to double your deposit. That's your first deposit, so don't miss out from this. So I can see Andrew from South Africa. I can see you all. I can see Seed from India. Then I can see Mujib from Pakistan. You're welcome. You all are welcome to today's section. I'm actually happy today because I made money today trading, so I'm happy. You know the joy when you make profit. So that's also what I am bringing today. I also want you to learn how you can make profit in the market and learn how I take my trades. We're gonna make money together, guys. Let's go. You all are welcome. I can see you guys. You all are welcome. You're welcome to today's section. You're welcome. So a quick disclaimer, guys. Any opinion, news, research, prices, analysis, or other information discussed in this webinar or linked to this presentation is provided as a general market commentary and do not constitute investment advice. So you all are welcome. So guys, quick reminder, as the class is going on, you can still go ahead and drop your questions, because I know you have a lot of questions for me. So what is that question you've been wanting to ask me? It is time for you to drop them. Let's discuss and get the solution to whatever issue you are having. So guys, let's go. Let's go. Okay guys, a quick intro about me. My name is Happiness Hanson and I'm a professional Forex trader with 3 years plus experience, and I'm also a trading coach and analyst, and my strategy, which we'll be using to analyze the markets today, is SMC. So I trade SMC. I trade in SMC. That's the strategy I use to milk the market, and that's also what I will be teaching you guys today, because that's what we'll be using to analyze the charts and get possible trade setups. So I also teach traders how to manage their money and find their trading style. So you all are welcome. So I can see from the comment box I have questions. If you have questions, drop. Once it's time for questions, I will answer all the questions you have in the comment box. I will answer all your questions. So if you have any questions for me, drop them. Keep dropping them. You know, this live section is actually what most of you go out there to pay for, but you're getting it here all for free. So you need to utilize it and thank Octa for this wonderful opportunity, because this is something you go out there to pay for, but Octa is giving it out for free, all for free. So you need to utilize it, attend all live sections, grab something, learn something, and become profitable in the forex industry. Okay guys, this is what we'll be looking at today, the content we have for today. So like I stated, I told you guys that I will be teaching you guys what I look out for before I place trades. So if you know that your friend is meant to watch this section and learn this, invite your friend now to join, because I'm literally going to teach you all my strategy in a nutshell. I'm literally going to teach you all my strategy, so you need to pay close attention and don't leave the live section, because if you leave, you won't get to understand my strategy. So you need to be here to know things I look out for, how I place my trades. For most of you here, I believe maybe you must have seen how I take my trades and so on, and you want to know what I do and how I do it when I'm looking at the chart. So I am bringing that in now, so just pay close attention to understand what I look out for before I place trades. So looking at the contents, what I look out for before I place trades, you can see number one here is the market structure, and the second here is break of structure, and the third one we have origin, what I call origin, brackets, supply and demand zone. So the S and D zones here it means supply and demand zones, and OB, that is what I call order block, and the fourth one is liquidity, the fifth one is imbalance, and the sixth change of character. So these are the things I look out for before I decide to place trades. So I know most of you will more like, it's too, so I'll have to wait until all these things appear before I take trades. I'm going to explain everything for you guys today, how I look out for them, how I wait for them on the chart, and what I need to see before I shoot, before I take my entries in the market. So once you get that, we'll not go into live chart analysis to apply all those things on the chart. So let me quickly give you guys rundown of the theoretical aspect of the things I look out for before I place trades, starting from that of the market structure. So when we're talking about the market structure, you can see what I have here. It says get to understand the market structure from the higher time frame to your entry time frame. So this is what the first thing I look out for if I want to take trades. I will start from the higher time frame. I will get to read the market structure. The market structure simply means what is the direction of the market. Is the market pushing up or is it pushing down? So that's what I get to understand. I do call it the story. I get to understand the story in the market. Is it pushing up or is it pushing down? Now, if I notice that the market is pushing up, which is what we have here, a bullish trend, it's giving us higher high, higher low, higher high, higher low, higher high. When the market is giving this type of movement, it simply means that it is pushing up, it is on a bullish trend. So that simply means there are more buyers in the market, which means that I should be buying more on that particular pair I'm looking at. So that is the importance of market structure and the things I look out for. So I need to understand the story of the market. Is it pushing up or is it pushing down? So you can also see that of bearish momentum. If the market is pushing down, that simply means it is bearish, where it will be giving lower high. You can see lower low, lower high, lower low, lower high, just like that. So where it is pushing down, I'll get to understand that, okay, the market is bearish, so I'll be looking out for more of sell positions. So that's the essence of market structure in my analysis or in my strategy. I need to understand the story. Now if you check here, there are actually three types of market structure. We have bullish trend and bearish trend, and we also have sideways trend. Now if you check here, I didn't add sideways trend because I just want you guys to understand the things I personally look out for before I place trades, because that's how we'll be analyzing the chart soon. So I only take trades when I have a direction in the market. So if the market is pushing up, that simply means I should be looking out for more buy positions. If the market is pushing down, that simply means I should be looking out for more sell positions. I didn't add that of sideways movement because I don't trade when the market is giving a sideways movement, that's ranging or consolidating. So I don't trade whenever market is giving me a sideways movement. I'll stay off until I get a direction, until I get a breakout. That's when I trade. So that's why sideways movement is not here. So these are the things I look out for when I talk about market structure. This is the first thing. I don't just open the chart to start trading immediately. I need to understand the story. And this is me telling you now that before you decide to take trades, you need to first of all understand what is going on in the market before you decide to trade. Understand the story that's going on. Is the market bullish? Is it bearish? Get to understand the direction before you decide to take a bias. So after the market structure, remember I said get to understand the market structure from the higher time frame to your entry time frame. So I'll read the structure from the higher time frame. I'm a day trader, so I read my structure starting from the daily time frame all the way down to my entry time frame, which is 15 minutes. That's 15 minutes time frame. So I will continue to read the structure. Then after that, I'll look at break of structure. Now linking it to the market structure that we just finished. If the market structure is bullish, for instance, that simply means it will be breaking structure to the upside. If the market structure is bearish, that simply means it will be breaking structure to the downside. So looking at the illustration I have here, you can see BOS to the upside. BOS simply means break of structure. So you can see what I have here. Point out if price is breaking structure to the up or downside. So you can see from what we have here, when market is breaking structure to the upside, that's BOS to the upside, you can see it. If it's breaking structure to the upside, that simply means it's bullish. I'll be looking out for more buys. That simply means I should be looking out for more buys whenever market is breaking structure to the upside for me. So you can see break of structure simply means when market clears out a high. So you can see from the diagram I have here, you can see market pushed up, it created a higher high, higher low. So this particular high, an impulsive movement clears it. So once market clears out a high, it's a break of structure. This is another high. You can see from here market cleared it out. It is what? A break of structure. Same thing with it if it is moving down. You can see from here market pushed down, a little retracement and pushed down again, clearing out this particular low, which is a break of structure. Same thing, a little retracement, clearing out this particular low. That's a break of structure. So that is what I mean by break of structure. So if you hear me say break of structure once we go to the chart, this is what I mean, and it's also part of the things I need to see on the chart before I decide to take trades. Now the next thing is actually what? The origin. Now linking it to, now the next thing we need to look at now is the origin. The next thing we need to look at is the origin, linking it to the break of structure we just handed. Origin simply means the consolidation. Origin simply means the consolidation that happens before the impulsive movements that will do what? Break structure. That's what origin means. You can say origin means the last consolidation before an impulsive movement that will break a structure. So you can see what we have here. Market pushed up, there is a retracement. You can see the consolidation, and immediately there is an impulsive movement that will do what? Break structure. So that is what I map out as my origin. If market is breaking structure to the upside, then my origin will become what? A demand zone. And normally the origin is where my point of interest will be. What do I mean by point of interest? That is where I will be looking to enter a trade from. That's what I mean by point of interest. That is where I'll be looking to enter a trade from, the origin. So once I see a clear break of structure, the next thing I need to look out for is what? The origin that caused that break of structure, and then I will highlight it as my demand zone if it's breaking structure to the upside. Then if it is breaking structure to the downside, I will highlight it as my supply zone. So that is it for origin. Then once I get the origin, the next thing I look out for is what? Liquidity what? Zones. Liquidity zones. Now liquidity zone simply means what market needs to sweep before it gets into my origin. So I need some key levels close to my origin that market needs to sweep in a way that it will fuel it for it to enter into my zone. So we'll go to the chart and you'll get to understand this more. So liquidity in a nutshell simply means, key levels, where a trader can see and decide to place trades. Liquidity simply means where money is sitting. So money needs to be sitting close to my origin so that market can come sweep it, so that it can give it more a push to tap into my origin and then push. That is if it is a demand zone. Same thing with that of supply zone. So I need to see that money is sitting close to my origin. Liquidity sitting close to my origin gives me more confirmation that the origin is valid. So once I see liquidity close to my origin, it gives me more confirmation that okay, this origin is likely to play out. So I will have more confidence in taking trades from that particular origin. So after I point out the liquidity zone, the next thing I need to see is what? Imbalance. Now imbalance means the gap price leaves on the chart. This adds to the confirmation too. So you can see from the illustration we have here, imbalance, there are lots of them. If we go to the charts, you will see a lot of them, but I don't pay attention to all of them. I only pay attention to the imbalance that is close to my origin. I only pay attention to the imbalance that is close to my origin. So you have a lot of imbalance on the chart. So you only pay attention to the imbalance that is close to your origin if you want to trade with my strategy. So imbalance, you can see from the illustration, is actually the gap market leaves on the chart. So if we go to the chart, that's the live market, you also get to understand it. So I need to see it close to my origin. It adds to my confirmations too. It shows that that origin is valid. So remember, once I get the origin, I need to see my liquidity zone close to my origin, and I also need to see imbalance. These are things that gives the origin more validity. Once these things are missing, I'm not going to trade from that origin. Once these things are missing, I don't trade from that origin, because it shows before market taps into an origin, it needs liquidity that will give it more push, more fuel to push down, then tap in. Same thing with that of imbalance. So imbalance and liquidity, they add to my confirmations. So they are more like my list of confluences I need to see. Now the next thing, also the very important aspect of my trades, this one helps me in my entries. I need to see it before I take my trades. I need to see it before I execute. It is what I call the change of character. That's what I call the change of character. So you can see the short form church. That's what we're calling. So you can see change of character shows that there is a shift in market structure which causes change of bias. Now, why did I say that change of character helps me in taking my entries? If the market is bullish and I am waiting for it to come into my origin, like market has broken structure to the upside and I'm waiting for it to get into my origin, as it is pushing down to get to my origin, it is giving a bearish momentum and it is giving that correctional movement to tap into my origin. So what will show me that as market has tapped into my origin, what will show me that my origin is ready to give out a buy? It's actually change of character, because once market gets there, I need to see a reaction on that origin. That's change of character. Now this is how change of character looks like. So you can see, like I said, it shows that there is a shift in market structure which causes what? Change of bias. Now you can see from this illustration we have here, you can see market giving out bullish momentum, breaking structure to the upside, breaking structure to the upside, breaking structure to the upside. Now origin shows us that this momentum has ended. Sorry, change of character shows us that this momentum has ended, that we should change bias. So whenever market stops breaking structure to the upside and pushing down, instead of it to tap into the last origin that broke structure to continue with the momentum, it will now clear it. That is when change of character happens. Just like the name implies, the character has been breaking structure to the upside, breaking structure to the upside, breaking structure to the upside. Then all of a sudden there is a candlestick that will break the last origin that caused the break of structure. That is actually a change of character from the market structure, and that is what we call change of character. Same thing with that of bearish momentum. You can see breaking structure to the downside, breaking structure to the downside, breaking structure to the downside, and all of a sudden there is a push that will clear out the most recent origin that breaks structure to the downside, which shows a shift in market structure and will cause a change of bias. So when it is bearish and it is pushing down, then change of character appears. That simply means that the momentum, that's the bearish momentum, has ended. We should look out for bullish momentum. Same thing with when it is bullish and there is a change of character. It simply means that the bullish momentum has ended and we should look out for sales. So that's how important change of character is. So guys, let's quickly go to the chart and do few analysis with what I've just explained now. These are the things I look out for. First of all, look at the market structure, we look at BOS, origin, liquidity, imbalance, change of character, so on. So let's head straight to the chart to do some analysis. Let's head straight to the chart to do some analysis, guys. So you can still go ahead and drop the pair you want me to analyze as I'm switching to my chart. You can go ahead and tell me the pair you want me to analyze. Go ahead and tell me the pair you want me to analyze. And can you guys see my screen too? Can you see my chart so that we can proceed? Can you see my chart? Hey guys, can you see my chart? So if you also check the comment box, you will see Octa Telegram group. I will also advise you join that group because setups do drop there every day. You get to understand some market tips, educational stuff to drop there. So maybe USD and Euro USD and Euro CAD. Okay, nice. So let's quickly analyze GBP USD. Okay, let's analyze GBP USD, guys. Okay, let me not start from here because these are some of the things I mapped out as I was trading earlier today. So I'm going to clear the chart and we will analyze GBP USD together, starting from the daily time frame. So this is how I read the market structure. Number one, the market structure. Now let's read GBP USD's market structure together. Looking at GBP USD from this top, you will see that it has been giving what? A bearish momentum to the downside. You can see it has been giving a bearish momentum. Market giving us from here, from this swing high, you can see it lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, and after that something happened. So you can see we've been having a bearish momentum. This is the daily time frame. We've been having a bearish momentum. Then after that, market stopped giving us what? A break of structure to the downside. Instead, it cleared out the last origin that caused a break of structure. It cleared out the last origin that caused break of structure, which is now giving out what? A bullish push to the upside. So that simply means there is what? A shift in the market structure. You can see we've just applied market structure here, break of structure to the downside, showing us that the momentum is bearish, and now change of character, showing us that there is a shift in the market structure. So you can see change of character happened when market cleared out this high here. When market cleared out this high here, that's when change of character happened. So you can see after this lower high, market cleared out this low to the downside, giving us a break of structure, and it's expected that if the trend is made to continue, it should tap into this particular origin that caused this break of structure. We should tap into it and keep pushing to the downside for the momentum to continue. But what happened? You can see market cleared out that origin. That's the last origin that caused break of structure. Market cleared it out, and a little retracement happened to tap into the origin that caused the change of character, and from there we got another push to the upside. So we are now getting what? A bullish momentum. That's a shift in the market structure. So we've gotten this break of structure here, and we've also gotten this particular break of structure here. So that simply means from GU we've gotten what? A shift in momentum, and we're expecting markets to tap into this particular origin that caused this break of structure, and we'll keep pushing to the upside. So that's what we have on GBP USD from the daily time frame. So GBP USD is telling us that the bearish momentum has ended, and we should be looking out for more bullish push to the upside. So let's still view it more from 4 hours. Let me take away this line. Let's still view it more from 4 hours. So you can see here, you can see it clearly from 4 hours. We have a break of structure. Now you can see everything I explained playing out on the chart. Now this is what I mean by break of structure. You can see this is a high. You can see This is a swing high here, a key zone. You can see if market reacted there, pushed down, reacted there, pushed down. But this particular candlestick came, cleared out that particular high, giving us what? A break of structure. It's giving us a break of structure. So where is the origin that caused this particular break of structure? Where is the origin that caused this particular break of structure? You can see this is actually the last consolidation. If we are to take it, this is the last consolidation that happened inside here. This is the last consolidation that happened before what? An impulsive movement. This is the last consolidation that happened before an impulsive movement. Now, to refine it, we refine it to order block. That's the origin, is refined to order block. So that is why I placed all those things in a bracket. That is supply and demand zone and my order block. Now, how do we refine it to order block? Once you point out the consolidation that caused the break of structure, the next thing on how to refine it is you look out for the last candlestick, before what? The impulsive movement that broke the structure. So if we are refining this to an order block, the last candlestick is actually this one here, this black candlestick here, this bearish candlestick. And just know that this particular candlestick, the last candlestick, can either be a bullish candlestick or a bearish candlestick. So don't think maybe because it is a push to the upside, the last candlestick should be a bearish candlestick, and when it's a push to the downside, the last candlestick should be a bullish candlestick. No, the last candlestick, when refining it to an order block, can be a bearish candlestick and it can also be a bullish candlestick. But just know that when refining your origin, that is your supply zone or your demand zone, to order block, you look out for the last candlestick reaction before the big movement that caused a break of structure. The last candlestick reaction before the impulsive movement that caused the break of structure. So how do you map it down? You measure it from the beginning, from where it opened from to where it closed. That's how you do it. Where it opened from to where it closed. That's how you measure out your zone. You can see it. Where it opened from to where it closed. That's how you measure out your zone. So you can see what I am waiting for on GBP USD. So now, where is the origin? Here you can see we've mapped out the origin. Now, where is my liquidity? So my liquidity here, I'm actually expecting market to clear out this particular this consolidation that is going on here. So this simply means that money is sitting here, and most traders, they've been buying GU from this level. If you go down to the lower time frame, you will notice that this particular consolidation here, most traders, they've been buying GU from this particular level. So I am expecting market to clear out this consolidation here, which will give it more fuel to tap into my zone, and then we push up, we keep pushing up to the upside because we have a bullish momentum. That's what I am expecting on GBP USD. That's what I'm expecting. So you can see we've been getting the correctional movement, the bearish correctional movement coming down. I'm waiting for it here in this particular zone. Now, most of you may ask, where is the imbalance? Since that's also what you look out for before you take trades. Now, let me quickly show you guys the imbalance here. Although market has already filled the imbalance. So let me take the chart back. So you can see what I mean by imbalance. You can see after this last candlestick, you can see where it's closed at this level, and after that we got a bullish candlestick that opened. So when we are talking about imbalance, most SMC traders, they can call it FVG. Some can also call it inefficiency in the market, just the gap the market leaves the price lives on the chart. So you can see after this particular candlestick, let me place a line there. After this particular candlestick closed here, so you can see we got what? A bullish push to the upside. Now if this movement, because this particular movement now is just showing that it was actually more buyers here, so when looking at the chart, it's expected that the buyers and the sellers should have equal movement. So when the movement becomes unequal, that's when imbalance happens. So here you can see that the movement became what? Unequal. So you can see after we got this push to the upside, this particular candlestick closed here. After we got this push to the upside, this particular candlestick closed here. Now if this movement is meant to be equal, it's expected that after this candlestick closed, the next one that should open should at least fill up the gap that this particular candlestick has created. Fill up the gap, and then the momentum should continue. But what happened? The gap wasn't filled. After this candlestick closed, you can see another one opened immediately and just retraced a little bit, and you can see this weak rejection here. It retraced a little bit and continued pushing to the upside, which created what? This imbalance. So you can see the imbalance here. You can see the gap market left here, and you can see that the gap is close to what? Our origin. You can see that the gap is close to our origin. So that's what I mean by imbalance. I need to see this close to my origin before I will consider that origin as being valid. I need to see that. I need to see that. So let's take it off from replay mode. So you can see market is currently reacting inside the imbalance. So most SMC traders, they take their entries from imbalance. Once market taps into their imbalance, they will execute their trades. But me, I don't take my entries from imbalance. Someone is saying from the comment box, FVG sounds better. Okay, you know, if I call FVG, it will be most SMC traders will be conversant with it, but that's why I'm using the word imbalance, because it's the general name. Everyone will get to understand what I mean by imbalance. So that's why I don't want to be calling it FVG. So you can see market is currently reacting to what? The imbalance here. That's where it is. It's inside this imbalance. This is inside this imbalance. So I'm expecting it to come into my zone. Now you can see how the imbalance is close to my origin. So now all this momentum here, like I stated, most traders can take this level as a support level now. They can take this level now as a support level and be expecting to start buying GU from this level immediately. So that is why this level will be treated as a liquidity the market needs to sweep. Market needs to sweep the money that is sitting here, because you know it's actually money that is moving the price. It's money that is moving the market. So I want market to clear out this particular zone here, because most traders will be placing buy from this level, considering that it has reacted, pushed up, and you can see the weak rejection. So they're expecting a buy here. That is why I consider this place as a liquidity zone. So I'm expecting market to sweep it, tap into this level, and immediately push, mitigate this particular order block, and immediately push to the upside. Now why am I more like expecting a buy from this level? Now if after this consolidation these impulsive movements happened, that simply means that a huge order has been placed at this level, which caused this impulsive movement. So I am expecting market to react and come and mitigate the remaining orders here, because this order block simply means that there are more orders sitting here that market should come and trigger and mitigate them. So that's just the idea of the strategy. Once you get a breakout structure and the origin, you expect market, you map out the origin, wait for market. Remember, trading is all about patience. You need to wait for the right setup. You need to wait for the right setup. I keep telling myself, it's not about the quantity, it's about the quality of the trade. So it's not all about taking 10 trades in a day, 20 trades in a day, and at the end of the day you'll be fighting with losses and profit. It's about getting the quality setup. So the quality setup, you need to patiently wait for it. You need to cook it and make sure that it is ready before you execute, before you start eating. You need to wait for it to be ready. So just like the gold I traded today, we'll go to gold chart and I'll show you guys something. The gold I traded today, I mapped out everything during London section, and I kept on waiting for the food to be ready, and at the end of the day it was ready during New York section. So you can see the patience level there. I was waiting. I didn't rush in. I was waiting. So you need to learn how to wait for the quality setup as a trader. Don't think once you come, there are times you will come to the chart and you won't see setups immediately. There are times you come to the chart and you won't see setups immediately to start making money. You need to wait, because if you rush in, that simply means you are rushing to lose your money. You need to patiently wait for the quality setup to be ready before you decide to take your trades. And also, you need to have reasons why you are taking your trades, just like I am explaining to you guys now. Reasons why I'm expecting GU to come here and react and give me more buys to the upside. So with the analysis we have here, you can see we are waiting for GU here. So that simply means GU is telling us that we should be looking out for more buys than sales. That's what GU is telling us. We should be looking out for more buys than sales. Now, if I'm mapping out my liquidity zone, I use this dollar sign because it simply means money is sitting here and I want market to sweep this particular liquidity zone here and tap in. So let's move it down to 2 hours. So you can see we started reading the structure from the higher time frame, that's the daily time frame. We've gone through 4 hours. This is how I take it all the way down until I get to my entry time frame, which is 15 minutes, and then I'll take my trades from there. So you can see I'm waiting for market to clear out. I need market to sweep this, clear it out before I get in. So this is 2 hours. It's still corresponding with what we have the higher time frame. Let's still look at it from 1 hour. So you can see it also from 1 hour. You can see it also from 1 hour. We are waiting for it here. We're waiting for it here, guys. So I can't tell you to start buying GU now. No. Wait. You can take screenshots now, and maybe after the live section you monitor this zone from your own end, and once market gets here, you wait for change of character, then you shoot. So I can't tell you to start buying GU now. Just wait patiently. Wait for GU to get to this zone, then we'll make money together. So we are now looking at my entry time frame, which is 15 minutes. So you can see the liquidity. I'm waiting for market to sweep all those things for me, and then I will look out for a buy here. That's what I'm waiting for on GU, guys. So you can see it has been giving a correctional movement. So from this correctional movement, when waiting, if you also see possible setups from the correctional movement, but I always advise just stick to the trend, because trading out of the correctional movement, you need to back test it to learn how to trade correctional movement, because as market is pushing down, still applying the same strategy, you need to wait for break of structure, then the origin, which is the supply zone, and you just keep following it. So most times I will just allow the correctional movement to happen until I get the market resting on my zone, and that's when I will decide to shoot. So all these things, GU has been cooking something for me, so I'm waiting for it here, and its food is almost ready, guys. Food is almost ready. So that's what we have on GU, guys. So you can, let me take it to 2 hours so that you can be able to take a clean screenshot so that you can look out for it. This is a lookout on GBP USD, so you can take a screenshot and look out for this from your own end, because it's not ready now. But once market gets here, we are buying, guys. We are buying. We don't need to waste time. We're buying. So let's quickly look at gold. Let's quickly look at gold. Okay, guys, so you can see the gold trade I actually took today. So I'm already off this particular trade after I got to this level. So it gave me close to 100 and as approximately 140 pips here. So this is actually my best entry for today. That's my best entry for today. So I won't rush into explaining how I got this entry now. Let me start from the higher time frame so that we also read gold market structure together. Then you understand why I decided to take a buy from this level. You understand why I took this buy from this level. This is actually the last trade I took today before this live section. This is actually the last trade I took today. So let's go. Let me clear the charts, then we'll arrive here. So reading from the higher time frame, that is my daily time frame. So if you check gold from this low, you will see that it has been giving what? A bullish momentum. From what we have here, you can see it has been giving a bullish momentum until we got this break. So you can see we're getting higher highs, higher low, higher highs, higher low, higher highs, and from there we start getting a bearish correctional movement. So you can see that. So from this particular level now, looking at gold from here, it gave out this high here, then gave out this higher low here, and we got what? This break of structure. Now look at the strategy now. Look at my strategy playing out. Break of structure. Break of structure to the upside. Where is the origin that caused this particular break of structure? Here's the consolidation. You can see the origin. After this particular origin, we started getting the push to the upside. So this push gave birth to all these movements that cleared out the structure. So you can see you map it out. Are you guys seeing something there? Where is the imbalance that is close to this particular origin? Where is the imbalance? So you can see the imbalance here and here. So you can see the imbalance that is close to my origin. Now where is the liquidity, guys? Where is the liquidity that the market needs to sweep to tap into my zone? So you can see this liquidity here. You can see how market cleared this liquidity. This is more like double bottom here. So you can see most traders may treat this level as what? A support level and expect to buy here. And you can see market actually reacted, gave out a little push to the upside, and from there it cleared it, tapped into my origin and pushed to the upside. And that is the push we are looking at on gold. That's the push that is giving the bullish momentum on gold. So after market tapped into this particular origin, you can see we've been getting this bullish push to the upside. So you can see market giving us higher highs. Then we have a correctional movement here. So let's view it from 4 hours to understand it more. 4 hours will give us more candlesticks to understand it. So you can see we also, after the push, we started getting what? A correctional movement. So you can see what happened here. You can see how change of character gave us a shift in market structure. The market structure was bullish. You can see it pushing up. So where is the change of character that happened here? So you can see this high was cleared out, which is what? A break of structure. This high was cleared out, which is what? A break of structure. We have a break of structure here. Now, where is the origin that caused this particular break of structure? You can see the consolidation. This is actually the consolidation before what? These impulsive movements that broke the structure. Now, refining it to our order block. Order block is actually the last candlestick reaction before the impulsive movement. And you can see the last candlestick reaction. You measure it, and then you extend and wait for market to correct back into that origin and then push to the upside. Now what happened? You can see after we got the clear break of structure, and you can see market came back to the origin, gave a little reaction. You can see give a little reaction. It indeed pushed up a little bit after it reacted. You can see it here. After it reacted, it gave a little push, but it didn't clear out this particular structure here, because if the trend is meant to continue bullish, we are meant to see market clear out this structure here, but market didn't clear out the structure. Instead, we got a reaction from this structure, and market ended up sweeping this origin that caused the most recent break of structure, which now resulted towards a change of character. So you can see market clearing out this low. So let's just take it from these weak rejections here. Let's take it from this, the last week rejection from there. Let's just take it from here. Oh no, it's too far. Let's take it from here. Cancel this week rejection from this particular point. Yes. So this is market giving us what? A change of character after it cleared out. You can see this market giving us, you can see church giving us change of character. It cleared out the last consolidation that caused this impulsive movement, which is giving us what? A shift in market structure. It's telling us that enough of the buys on gold starts looking out for sales on gold. So you can see from here we got this push as break of structure, and this is actually the origin, but you can see markets didn't come back to that particular origin. It created another origin, and then we have what? We have this break of structure here to the downside. We have this break of structure here to the downside, and this is actually the origin. You can see the consolidation here before what? The impulsive movement. You can see the consolidation here before the impulsive movement. So the buy I took on gold today is actually what? A correctional movement, and I will still show you guys how I was able to get the confirmation before I decided to take the buy. So you can see from 4 hours time frame that gold is reacting to this supply zone. So now that I have gold reacting to this supply zone, and we've gotten this confirmation that gold is saying that we should start selling, all I need to do now is go down to my entry time frame and look out for 15 minutes change of character, and from there I will continue selling gold, because now gold is reacting to this supply zone, which simply means that gold is sitting on a sell zone, so we should look out for a sell. But this bullish correctional movement, which led to tapping into this particular zone, I was able to catch this correctional movement today, and I will, when we get to my entry time frame, I'll still show you guys how I was able to catch that. So you can see gold is resting on a supply zone, which simply means we should be looking out for more sales. You can see how gold is saying that we should start selling. You can see how I explained it the bullish momentum ended here. We got change of character, and now we are getting a bearish momentum. So the only thing that will still show us that the bullish momentum is still intact is if gold clears out this origin, which will now cause change of character. If it clears out this origin, we'll now look out for the particular origin that caused this change of character, which is clearing out this structure here. Then from there we'll keep pushing, which simply means the bullish momentum is still intact. But if gold fails to break this zone, then that simply means we'll keep selling, because it has given us what? A bearish confirmation here. So you can see it has given us a bearish confirmation from this swing high. We've gotten lower low, lower high, lower low, and you can see market coming back lower high. So we're expecting something like this, and we'll keep what? Pushing down. So you can see how we are understanding the story here. So gold is sitting on the supply zone. Let's quickly go down into, you can see this is 1 hour. Let's quickly go down into our entry time frame. So this is gold sitting on the supply zone. Now this was actually why I closed out this this buy at this level, because I noticed it was reacting to a supply zone, so I had to stay off. I can only continue buying if gold clears out this zone, then I'll keep buying. But for now, this is a vital zone that we need to be careful with. Now, when can I decide to start selling? As we can see that gold is resting on a supply zone. Now, this is another thing. You need to wait for the change of character. That is our confirmation. Remember, as gold pushed up to tap into the zone, it was pushing up with a bullish momentum. So a change of character needs to show up to tell us that the bullish momentum has ended. We can start selling. But from now, you can see the reaction we have on this zone from our entry time frame. It's still giving a bullish build up. So I can't start getting into a sell now. I need market to sweep this low. I need something like this. Clear out this low here. Clear it out, and then once it clears out, I'll wait for a retracement into the origin that caused the impulsive movement that cleared out the low, and then we can now start selling gold from that point. If I don't see that, I won't sell gold, because if you don't see that, that simply means that this bullish build up is getting ready to clear out this particular origin. So you need to see that change of character. So you need to see that change. You can see after this particular candlestick, we got what? This impulsive movement, which gave a break of structure here. So you can see it gave a break of structure here, so which simply means market can react to it, which it has reacted, and keep pushing up. So I need market to clear out this last origin to give me what? A change of character, before I'll know that my sell is ready. So this sell on gold now is almost ready, but it is not ready. Yeah, it says almost ready. So you don't need to rush in. We need this. We need a shift in the market structure. We need a shift here. Then once we get that shift, we wait for a retracement to get back to the origin that caused the shift. Then we can start selling gold. Now, because of our time, let me quickly explain to you guys how I was able to catch this buy on gold, so that if you see it, you can still apply that. How I was able to catch this buy on gold, then to close here. So looking at gold this morning, you can see it was giving a bearish momentum, and then we got this high here. You can see this particular high here. So this was more like a consolidation happening inside here. It was more like a consolidation happening inside there, and inside there we were also getting break of structure inside this particular consolidation. You can see this break of structure happening here, and after the break of structure, market will still come back to the origin. Let me zoom in a little bit so that you see it. So market will still come back to the origin, react, push down, but it is not clearing out this low for the bearish momentum to continue. So that was the first confirmation that I saw, and I noticed that okay, there's likely to be a change of character here. So all I was waiting for was actually what? The change of character. And immediately this particular candlestick gave me this change of character. So you can see how I execute my entries. Once I see my change of character, I am not wasting time. I will sell or buy depending on what the market is giving me. If it's telling me to buy, I don't waste time. I won't hesitate. Once I see everything I need, I will go ahead and execute my entries. So you can see immediately I got this bullish push, this bullish candlestick. It pushed up and remained and closed above, so which showed me a clean change of character. So all I needed was a little retracement to the origin. Now, where is the origin that caused this change of character? You can see this is the last candlestick before this bullish candlestick push. You can see it here. So this is actually the last candlestick before the push. So all I needed was a retracement to tap into that origin. Then I will take my buy. So that was how I was able to catch this on good. So you can see it as market pushed up from this bearish candlestick. As it tapped into this origin, it triggered my entry and we started pushing to the upside. So when setting my SL is below, a little bit below my order block and the last week rejection of the consolidation. So that's where I place my SL. So you can see that was how I was able to catch this clean buy on gold. So now you can see it's reacting on this zone, and you can see it is pushing down. Now see what I'm talking about. You can see market is pushing down now, and it tapped into this origin and is reacting. I need market to sweep this origin, give me a change of character, push up again, then we'll start selling gold, guys. So let me quickly put the illustration here so that, because the live section will soon end, let me put the illustration here so that you can look out for it from your own end and execute the trade immediately. So guys, that's why it is important you join the Octa Telegram group so that you will get updates on this trade. Join the Octa Telegram group, guys. Okay, so that is it for today. So I've given out two setups. That is one from GU, that's GBP USD, and one from gold. So they're almost ready. So we're looking at gold now. So as we're looking at gold, let me quickly go through the questions here in the comment box, answer, and then that will be all. So let me quickly go through the questions, guys. So someone is asking how many time frame, that's a question from Das, how many time frame is best. So you can see how I do my top-down analysis. You can see I'm a day trader, so I start reading my market structure from the daily time frame. You can see I just need to understand what is going on generally in the market before I go down to my 15 minutes time frame to take trades. So there are some traders that depend, or they just focus on one time frame, but for me, I always advise get to understand what is going on generally before you decide to take trades. But what you need to have is you need to have your entry time frame. Entry time frame simply means where you execute your trades, where you need to execute your trades. So I don't execute trades from the higher time frame, because if indeed I execute trades from the higher time frame, I should be taking this sell on gold now, because obviously it's reacting to my higher time frame origin. But I don't take trades from the higher time frame. I use the higher time frame to understand the story, and you can see how I am patiently waiting for this in my entry time frame, waiting for it to give me the confirmation I need in my entry time frame before I will enter. So I will always advise you get to understand what is happening generally, but choose your entry time frame. Choose your entry time frame, guys. So the next question here, how to mark market structure. I guess I've explained that. So if you are still finding it, if you're still trying to understand it, you can come back to this video to watch and understand how to bank the market structure. So we have a question from Ali here. Do you place your trade immediately after price reach the OB area? So I guess what we are looking at now on the screen should explain it. So you can see market is reacting to my OB area from the higher time frame. So I need to see what my change of character, which is what we are waiting for. And you can see it's almost ready here. So I need to see my change of character before I take my trades. I need to see that. But once I come to 15 minutes time frame, which is my entry time frame, and I notice all my confluences are intact, I notice a break of structure to the upside, my imbalance, my liquidity, everything intact. All I need to do, once I get an origin from my entry time frame, which is 15 minutes time frame, I'll just go ahead and do what, and place my pending order there. I'll go ahead and place my pending order. So I take my entries immediately once the origin is from 15 minutes. But once I get origin from higher time frame, I need to come down to my entry time frame and wait for confirmations before I enter. So we just got so someone is asking, one candle breakout is church, is it okay? So trying to understand this question, I guess you're asking, is one candlestick enough to cause change of character? Of course, as we are looking at the screen now, if this particular candlestick closes below this origin, it's a change of character for me. So all I need to wait for is the next candlestick to open, retrace back to the origin that caused the change of character. Then I am selling immediately. So we have another question: how can one set SL? So just like I explained, looking at this particular trade I took today, so using my position tool, you can see where I took my entry from this level. So my SL, like I stated, is or must be under, a little bit under my order block, and a little bit that's below the last week rejection inside the consolidation that happened before the impulsive movement. So you can see where I placed my order block, just a little bit below you can see where I placed my SL, just a little bit below the order block. That's how I place my SL. So I'll take 2 more questions, guys, and I'll go ahead and end the live section so that I won't take another person's time. So don't worry, guys, another live section will come up and we'll still continue from where we stopped. So okay, a question from Ali: what is the best time frame to enter a trade? So I think it all depends on where you feel more comfortable placing trades. So you can see how I read the market structure from different time frames, and at the end of the day I'll come down to my 15 minutes time frame to take trades. So for me, the best entry time frame for me is 15 minutes. Most traders prefer 1 minute, 3 minutes, 5 minutes, but for me 15 minutes is actually what I need to use for my entries. 15 minutes is actually what I need to use for my entries. So okay, let me go up a little bit because I know some people dropped questions. So let me okay, some of the questions I'm seeing here I've already answered them. Which section should we trade? Okay, nice. Okay, guys, I've answered most of the questions I have in the comment box here. So if you also have more questions, that is the essence of the Octa Telegram group, go ahead and join the Telegram group immediately. Just go ahead and join the Telegram group and drop your questions there. You will get answers immediately. Drop your questions and you will get answers immediately. Okay, guys, so let me quickly share my promo code, just like I promised. I told you guys that I'll be sharing my promo code. So if you're trading with Octa, go ahead and use this promo code to double your deposit. So it gives you 100% bonus once you make your first deposit. gives you 100% bonus once you make your first deposit. So you can see it, double your deposit using the promo code HAPPYFX. So you can see how you can apply that. Open the Octa trading app and visit our official website. Go to your profile, find the promo code section in the menu, enter the promo code and press activate. Make a deposit and enjoy the bonus, guys. So take advantage of this now. Like, it's like this now, guys. Get 100% deposit bonus. So once you are trading with Octa, just message me for this promo code if you're still finding it difficult on how to apply this. So guys, thanks for joining for today's live section. Hope you enjoyed the live section. So guys, before I end this live section, just give me a fire emoji that you enjoyed. If you enjoyed this today's section, and you grabbed something, just give me some fire emojis on the chat before I end the live section. So if you grabbed something today, just give me some fire emojis. Give me some fire emojis, guys. Give me some fire emojis. Some fire emojis. So someone is asking the link for the Telegram group. Just check the comment section. Check the comment section. You will see the link for the Telegram group. Go ahead and join. Okay. You can see it just dropped, so you can see the link for the Telegram group there. So go ahead and join. All of you go ahead and join the Telegram group. Yeah, I can see the fire emoji. Drop them, guys. Drop the fire emoji. So thank you once again for joining. See you guys next time my live session comes up. I love you guys.